Hello and welcome everyone to this webinar presented by the Charities File on prohibited and questionable practices regarding fundraising by registered charities. My name is David Reed and I'm coming to you over the internet from beautiful downtown Thunder Bay. And I am one of about a dozen trainers from across the country who have been working with the Charities File for the past 3 years. And we have presented both face-to-face as well as webinars sessions such as this one and podcasts in the charitable sector. I am currently a board member of Volunteer Thunder Bay, and we are a charitable organization established some 35 years ago. I have been active in one of our local programs, which has been providing training to boards of directors in the nonprofit sector and to our community partners, and this just assists them in being better board members. Now, many of you are probably board members of charities from across the country, or are perhaps an employee of a charity and have some involvement in fundraising, or you could be the fundraising coordinator or a developer for your organization. If you are not totally familiar with the Charities File, it is a joint project of the Center for Volunteer Sector Research at Carleton University in Ottawa and the Community Sector Council of Newfoundland and Labrador. The main module of Fundraising by Example is the latest in a series of modules developed over the past 3 years by the Charities File in cooperation with, the guidance of, and the approval of Canada Revenue Agency. Other modules that have been developed and presented in face-to-face sessions include 10 practices for managing your charitable status, training and resources to complete your T3010 charitable return, and the Treasurer's Chest, which is one of a series of short modules called the On Board series. Through the marvels of technology, I'm going to take you to the charity's website, and this will allow you to kind of have a look at what we want to see in our presentation. Okay, this is the charity's website, which I'm going to now, and this is the main page on the website. We're doing part of this module, Fundraising Learning by Example, and we're going to concentrate on one particular section of it regarding prohibited practices. If I open this by double-clicking, you can see here that I can look at the training session itself, and I can go to the PowerPoint presentation. You can see these complete slides for the complete presentation rather than just the section that we're doing. And also here in scenario, let me see where we're at. Here we go. If I go to the prohibited or questionable conduct, this will give you a scenario that would hopefully help you kind of identify mistakes that this particular example shows, and it would help you as a learning tool to see how you have learned from this particular program itself. Now also, if I go back here to the 10 Practices module, I'll just double click on it. Again, you have the complete slideshow presentation that's available for you as well on the 10 Practices. So here's that 10 Practices module, and this assists charities, especially for board members. I think it's very important if you are having a little bit difficulty or thinking that you have problems in terms of managing your charitable, your board, then this is a module that would be extremely important for you and beneficial to look at. Especially for board members, it's beneficial to take the time and review all of these modules, and they will provide you with a wealth of information on aspects of managing your charity. As part of your due diligence, these will assist you in the knowledge and guidelines that charities must abide by. The training and resources to complete the T3010 form. This will take you right through the T3010 form itself. The treasurer's chest would be very valuable to anyone who's involved in the financial aspects of your organization. Provides you with tools to manage your money better. The fundraising receipt book is an important one as well, because many of you may be involved in events where a donor receives what we call a benefit. And so this shows you all about split receipting and other items which are important for a charity to maintain. It also provides you with information on what your charitable receipt must look like, and all those guidelines that are presented through Revenue Canada. Agenda Gems is just a collection of tips and tools for board presidents and directors, because there are certain items that you want to look at every year in your plan of action, and that will guide you in the right direction for that area. The shoebox is a module which shows you what information you need to be passing on from administration to administration, and in here, if I double click on that, you can go right here, and this will give you information that should be available in that organizational shoebox. So it provides information for you to make you a more effective board member for your organization. So as I say, I would encourage you to look at the website and take that into account, because it offers tremendous training opportunity for you and your board. Okay, let's go back to our presentation and just give you a quick overview. As with all of our seminars, I will be providing you with general information about guidelines and not advice. Canada Revenue Agency advisors are the experts when it comes to specific situations that might be applicable to your particular charity. This will also not be a how-to on fundraising, but essentially it's a resource to help ensure that your planned fundraising activities and ones that are undertaken by your charity will meet the guidelines of the Canada Revenue Agency. Other parts of the fundraising by example module will assist you in how to distinguish between fundraising and other expenses as they are reported on the T3010. Also, they will help you to allocate expenditures for reporting when you return the T3010B charity's return. And it will also help you deal with activities where fundraising may only be a part of that activity, and how do you divide the costs so that you're reporting your fundraising costs appropriately along with other expenditures that you're making on your charitable purposes. How the CRA assesses fundraising is also available in another part of the module, but I will have a look at the fundraising ratio, which is one of the measures that Canada uses to see how efficient, in a sense, charities are with their fundraising efforts. Also available on either the receipting module or the fundraising by example module, you will have information reporting to general receipting. Now, this particular webinar will look at basically identifying what activities may result in sanctions, penalties, or ultimately revocation potentially of your charitable status. Although I wouldn't get too worried about that. The CRA works closely with charities if they are in a sense going against guidelines, and they will take the time to work with you and work through you to make sure that they get you back on track. Let's review the implications of charitable status, which you should be quite familiar with. First, charities are exempt from income tax. Secondly, charities can provide official tax receipts for gifts received from both individual and or corporate donors to reduce income taxes payable. Thirdly, as a charity, you are able to receive funding from other registered charities, and these are referred to as qualified donees, and they are actually listed in your T3010D charity's return on a separate page, one of the pages of the return itself. With these privileges, obviously, come responsibilities which charities must uphold to maintain their status. Number one is basically to demonstrate that you are developing or using a substantial portion of your resources, including both financial, staff, and volunteer resources, as well as assets, to deliver the charitable purposes described in your constitution or letters patent. Your charitable purpose, remember, are your reason for being. The second responsibility is to file within 6 months of your fiscal year end the T3010D information return. Revenue Canada recognizes the important role that the charitable sector provides to communities and the country in general, because in no way could the government ever provide the direct support and services that charities and their volunteers provide to the public and their clients. So the T3010 return is how the government is assured that charities are fulfilling their charitable activities and using their resources to fulfill those purposes. Also, you need to carry out other obligations which may apply to charities under the Income Tax Act. Okay, well, what are the results or what are the possible consequences of conducting prohibited fundraising activities? Well, ultimately, a charity status could be revoked, in which case you would not be exempt from income tax and those other privileges of charitable practice. There may be an imposition of compliance measures, which would involve perhaps signing a letter of agreement to comply or other such information which you may have to return back to Canada Revenue as backup for activities that they feel have been prohibited or questionable. If you are not currently have charitable status and may be applying in the future for charitable status, if you conduct prohibited fundraising activities, this could prevent you from having your charitable status approved. Okay, well, prohibited fundraising conduct can obviously include illegal or situations or activities which are contrary to public policy. It's prohibited to have fundraising as a main or independent purpose of the charity. You have to admit that you were formed for certain activities which you wanted to do as a charity, and so those must be your main purpose. Fundraising cannot be a main purpose. Prohibited activities would also result if there is more than incidental or disproportionate private benefit to individuals or corporations as a result of your activities. And if any misleading or deceptive information is provided to potential fundraisers, obviously this would be prohibited as well. In the next slides, we're going to actually examine each of these particular areas here, and that will help you kind of, will give you some kind of examples or what might be the easiest way to tackle these. Illegal activities are either criminally fraudulent or violate federal or provincial statutes governing charitable fundraising, charitable gaming, or use of your charitable property. An example, of course, would be improper donation receipts, not properly numbered or authorized properly, not having your charitable number on it. And so that would be something that you want to just make sure that your receipts do comply with the guidelines of Revenue Canada. Obviously, too, when you're dealing with municipalities, you must ensure that you get the proper licensing from your local municipality for things like raffles and 50-50 draws and those things that we do to try and raise some funds within the community. Activities which are contrary to public policy would include those that cause incontestable or undeniable harm to the public interest and do not comply with the government rules and regulations. An example of this would be solicitations by phone that fail to follow the CRTC telemarketing rules. Because even though it may be a third party that is acting on your behalf, it is the charity's responsibility to make sure that the message is correct and is above board and all the proper information is presented to prospective donors. Now, obviously, a registered charity, its main purpose must be to carry out its charitable programs. Fundraising cannot be a main purpose of the charity. Charities can only raise funds to serve, in a sense, or promote their programs. And fundraising is not an inherent or an exclusive right of charities, and it must not be a main purpose. Charities can raise funds to fulfill their mandate. That's the main reason that organizations raise funds. Many organizations may also apply to foundations, Trillium being one. Trillium is a foundation, so its main purpose is to fund qualified donees. That is other charities. In Thunder Bay, we have the Patterson Foundation, which Volunteer Thunder Bay might normally get, say, $1,000 to contribute toward, say, a new laptop computer that needs to provide some portability for the individual working with our youth program. So there are foundations that you can apply to, and those have basically been established to fund other charities. Remember that charitable purposes, as outlined for your charity, would include donations that you might make to other charities. So these would be, in a sense, disbursements to qualified donees under the Income Tax Act. So you as a charity may actually gift or provide a gift to another charity, and that could be indicated as part of your charitable purposes. Well, I just go back to this point here that The government does recognize that fundraising by charities is pretty much these days a mandatory item they do, but they want to make sure that your levels of, in a sense, effort is manageable. In other words, don't spend all your resources trying to find money. It's a sad state if this has to occur, but it's important to emphasize that your main purposes must be to deliver the programs which you said you would do in your constitution or your letters patent to the government. It's important again to let you know that you want to make sure that there is no disproportionate benefit to either corporations or suppliers of goods and services that you might hire as a result of your fundraising activities. This would be you don't want to create gifts which are perhaps way too expensive and do not kind of increase the donations that you might be making. So the profits to other organizations must be limited and an indirect result of your charities rather than a main product of your charity. Be assured that when you purchase goods or services that they should be at or below market value and from arm's length suppliers and not based on commission. You should be familiar with arm's length or at not arm's length. If someone is not at arm's length, they are related to perhaps a member of the board or an employee of the organization, either by blood or marriage or common law relationship, or even close business relationships can be deemed as not being at arm's length. Now, here's a point here that if any of these three items here are not fulfilled, it's kind of on the onus of the charity to provide documentation and proof as to why the decision was made to go with that particular supplier or that particular merchant that you were purchasing products of. And of course, charities, as I said, anything that is misleading or deceptive, the onus falls back on the charities. It is the charity's responsibility, even if someone is working on their behalf or trying to raise money on their behalf. This is door-to-door people or whatever, that the representations that they make are fair and truthful, accurate, and complete when it comes to seeking the donations of individuals and members of the public. Now, misrepresentation by any charity is obviously going to have a negative impact both on that charity itself, but also to other charitable organizations within the community. And in a sense, if it's something that is drastic and major, it can have a complete reflection on the charitable sector as a whole. So it's important to make sure that you're not misleading or deceptive in your presentations. Now, in terms of misrepresentation, you must be clear on the charity that is receiving donations. You must be clear on the geographic location where the charity operates. Volunteer Thunder Bay operates within the city of Thunder Bay. We are not normally going outside the city itself other than to perhaps present seminars that would assist boards. I recently went to Red Lake, and I have been to Fort Francis to do sessions, but normally when we raise money, it's for our activities within the city itself. So if you are a charity that services, per say, the south end of Winnipeg, you don't want to have a message that says you contribute and do services all across the city, because that's not really, in a sense, fully being truthful of where your activities actually are. You must be clear and accurate on the type of work that you're raising the money for and the work that your charity does. It's just being honest, right, and truthful. And then the percentage of funds raised that will go to charitable work. You may see an advertisement that says 100% stays within the community. Well, if there is some service to, or if there is some of those funds actually going back to someone who is actually working on your behalf, then all of those funds are not going towards your charitable work. So you must be clear on that particular aspect. One of the the activities that we have, and it's actually coming up in May for Volunteer Thunder Bay, is something called the Mayor's Walk, which we've had for about 5 or 6 years now. And what it is, it's a fundraising opportunity for ourselves as well as other charities. Other charities can register, they can have walkers, and walkers then make pledges. Also, individuals could walk in the Mayor's Walk and get privileges or get donations and pledges for a favorite charity of theirs. Part of the proceeds go back to Volunteer Thunder Bay to work with our youth programs. And so there is a kind of a split up, and the percentage of the funds go to us as well as a percent going to the charity for which the individual may have walked for and may have raised funds for. So it's a sharing. It's an opportunity for all of us to celebrate the volunteering of Thunder Bay. We're a very high volunteering percentage community, and so we have to be careful that the message goes out correctly, that we know where the funds are going and who they're going to, whether other charities or ourselves. Now, what I would like to do before we get into these areas of concern, I'm going to jump back to the fundraising model. Oops, let me see, I'm not sure where I am here, but oops, I was looking for the what did I want to call it now? Yes, the fundraising chart that that Revenue Canada uses. Oh, sorry, let me get out of there and get out of here. Okay, I wanted to try and go to, there it is. I just have to go back a couple of slides here. Okay, this is the fundraising ratio, which I had referred to previously. And this is one of the ways in which Canada Revenue decides whether they're going to question or they're going to have a concern about your fundraising activities relative to the expenses that you create in raising those particular funds. Now, the fundraising ratio is made up of lines from your T3010 return. And what it does is it takes your fundraising expenses, and these are allocated to line 5020 in your T3010 return. And also you have fundraising revenue, which is a combination of lines 4500 and 4630. Now, when they compare those, what CRA targets is that they would want to see your ratio at under 35%. That ratio is unlikely to generate any questions or concerns from Revenue Canada. they certainly don't want you to be spending an awful lot of money to get a little bit of money, and that's the concern there. If the activity results in a fundraising ratio which is between, say, 36% and 69%, they would examine that ratio over the recent years to determine if there is a trend to higher costs. The ratio is based on a year's fundraising, not necessarily each project. Some of your projects may actually return less money relative to what you expense in the first year because perhaps you've had to set up a kind of a template to operate this in future years. So that may be part of the argument that you might have to make, is that this was the first year of running these particular projects, and that's why the expenses appeared higher, because these expenses should be reduced in coming years or as you progress and use this on an annual basis. If your fundraising ratio is above 70%, that is, you're spending 70% and actually only making 30% from the fundraising activities, then this would be something that would probably be unacceptable, and they would want to ask you questions as to why this ratio occurred, and perhaps even why would you undertake this when you realized that there was going to be very few profits raised from it. So we'll go back to the presentation now and have a look at the areas of concern, which are indicators that could lead to further review from Revenue Canada. And these are things which obviously should be avoided. Now, in slides that will come forward, we'll look at each one of these particular areas of concern. So you will have an opportunity, to expand a little bit on what these are actually indicating to you. Sole-sourced fundraising contracts without proof of fair market value is something that would raise concern with Revenue Canada. This would be just where you perhaps have not sought out other potential opportunities to raise money or from other clients. Non-arm's length fundraising contracts without proof, again, of fair market value. Revenue Canada wants to make sure that you get your money's worth, and so they don't want an unbalanced kind of payment toward people that are acting on your behalf or people that are supplying you with product. Fundraising initiatives or arrangements that are not well documented. That's an area of concern in that you want to make sure that you have all the information and all the research material that was gathered for a particular fundraising activity or initiative, that it's available if they make a call to you. And we'll talk further about this in the next slides anyway. Fundraising merchandise. Sometimes we purchase merchandise that is given as a gift to someone who makes a donation. If it's something inexpensive like a pen or a pencil or a bookmark or something like that, that's not too much of a concern. But if you're giving a series of gifts to people that, depending on their level of donation, you might be well aware of making sure that that just is not purchased at inflated prices, and that when it is purchased or when it's given as a gift, that it has provided an increase in the fundraising revenue or a direct increase in the donations themselves. Another area of concern would be activities where most of the gross revenue goes to contracted non-charitable parties. This would be, in a sense, perhaps a professional fundraiser that you've hired. And again, they would look at this potential ratio and to see whether you're getting a fair return for your dollars spent. Commission-based remuneration or payment of fundraisers or payment to fundraisers based on the amount, that would be basically a commission, or the number of donations that they generate. That's not something that is really, it just is an area of concern. Then you want to try and avoid any of these particular areas. Total resources. This would be a situation where you have total resources that are devoted to fundraising, and remember, resources would include both financial as well as staff as well as volunteers. That if you're using them to raise money rather than to promote or deliver your programs that you should be doing, then they're going to be quite concerned about that. Misrepresentations in solicitations or information that you present to either donors or to Canada Revenue about fundraising or the financial performance of those particular activities. So in the next series of slides, we're going to look directly at each of these so that you have a little bit more of a handle on what it actually means. So sole sourced fundraising contracts without proof of fair market value. This would be where perhaps only a single individual or a business may have been given an opportunity to submit a proposal to you and you've accepted it. It may imply that this business or that individual is receiving a disproportionate private benefit, resulting in the fundraising being assessed as unacceptable or being, the Canada Revenue frowning on that particular activity. A charity must prove that goods that they have purchased for fundraising or services that they use for fundraising potentially are purchased at fair market value. Non-arm's length fundraising contracts without proof of fair market value. When entering into a non-arm's length fundraising contract, this would be one where it's a friend of a board member, or it's a sister or brother that might have a store where you might purchase goods or something like that. And you want to just make sure that that it is a non-arm's length if that is possible, and to make sure that you do get quotes from at least 2 other suppliers, so that if Revenue Canada did happen to call you, you can demonstrate that that service or those goods were bought at a fair market value, and that at least you got the best deal, even though it may have been from a non-arm's length supplier. The third area of concern is fundraising initiatives or arrangements that are not well documented. Remember, it is the charity's responsibility to document the fundraising activities and to ensure that their resources are being used for their charitable purposes, and that other regulatory obligations under the Charities Act are being met. The charity must be sure that it retains control over the fundraising as well as the message that is presented to potential donors. In this case, if you have a fundraising committee or the board itself makes the decision about fundraising contracts, those minutes are saved anyway, but it's important to have those at hand if there is a call from Revenue Canada and be able to access those and indicate that the approval was given to the board and that there was adequate information gathered to make that decision. Records that you researched or information that you gathered in terms of the fundraising activities before they were undertaken are also important to keep on hand, just so that you can make Revenue Canada aware that you did due diligence when you consider this fundraising event, and that you've got your ducks in a row, so to speak. If you've gone to the extent of procuring and accessing fundraising services, that you want to make sure that you have looked very closely at the procurement process, that the costs are appropriate for the fundraising service that you're after, and that you have documented it and maintained a good working relationship before you enter into the contract or contracts with any individual or corporation that is working on your behalf. And then you want to make sure that you get any fundraising contract in writing. Never have a verbal agreement, obviously. And remember that any contract must be signed by a member of the board or a person of authority. The board has to maintain its control over the organization itself, so it should be a board of members, a director, or president, vice president, or treasurer that would be a signatory on any contract that the organization enters into, whether it's for fundraising or for rental agreements or things like that. Remember, any contractual obligation should be signed by the principals of the organization, which are the board of directors. And another concern would be that the charity purchases gifts for donors as kind of a donor premium or a gift. You should be able to demonstrate that that donation resulted in an increase, or that gift, resulted in an increase from the donor. Otherwise, it may raise concerns that the gifts or premiums might not have been necessary, and that here, in that case, the supplier might have received an undue private benefit. And the supplier of these goods should be at arm's length and purchased at fair market value. One example of this would be, you're probably familiar with the fundraising tele-centers, say for TV Ontario. They often will have, say, a concert put on by a band, and for a certain donation you would get the CD. If your donation gets above another level, then you would get the DVD plus the CD, and then if your donation got to another one, you might get a ticket to the concert. So there is some incentive, as these gifts are somewhat progressive according to what the donor is giving to the organizations, and they're proportionate, and they're not excessive in terms of being over and above what the value of the donation is obviously worth. Another concern would be activities where most of the gross revenues go to contracted non-charitable parties. This would occur potentially, and there would then be an excessive or disproportionate private benefit to that company. It would make the fundraising activity unacceptable in Canada Revenue's eyes. This would be where a high percentage of the fundraising proceeds actually go to the party doing the fundraising rather than to the charity itself. The charity has to make sure that it has taken steps to ensure fair market value for the goods and services, and it has taken measures to control the costs of that fundraising activity. The larger the cost, either in absolute terms or as a proportion of the charity's resources used, the more attention the charity has to pay to that particular issue or that particular fundraising activity. Another major concern would be commission-based fundraiser, where remuneration or payment to the fundraisers is based on the amount or number of donations. This would generally, if you enter into a commission-based fundraising, initially that's frowned upon because it may not be that they have given adequate time and resources on their behalf to collect that money for you. So you have to be careful if you enter into any commission-based fundraising, and I would try to avoid any situation where you get into a commission-based fundraising effort conducted by a third party, and just try to keep a much better handle on your own fundraising by using your own volunteers or staff resources as they are available. Another situation to avoid would be where total resources devoted to fundraising are exceeding the total resources devoted to your program activities. And this would be a major concern because the result can be that funding becomes a kind of a collateral purpose of the charity. And it would could arise whether the fundraising is done by staff or through a contractual arrangement. That is that, unfortunately, and sometimes it happens, is that you are continually looking for sources of funds. And so rather than delivering the programs or the services to your clients that you're supposed to be, unfortunately, much of your effort is going to try and kind of stay in business. And that's something that Canada Revenue is really going to be worried about. So you want to make sure that you have a very close look at your budget and make sure that you're not putting in proportionate or disproportionate amount of your effort into raising funds and not delivering the service. Now, obviously, misrepresentation on information or disclosures about the fundraising and its performance are obviously a concern or an area that you just must be aware of. Now, misrepresentations can obviously result from intentional conduct of the charity, and they could arise through a failure to exercise adequate information to the public and or the stakeholders of the organization, because obviously you're reporting back to funders who have helped you in the previous year, and you want to make sure that you have the information that is appropriate back to the public and to stakeholders in the organization itself, your membership, etc. Misrepresentations can occur prior to or during the fundraising when the message, if you want to call it, is being presented to potential donors. They can occur in a charity's reporting of its fundraising or financial performance after solicitations. So take care that you are putting those resources to the activities that you said you would in the original spiel, and to not kind of siphon off some of that fundraising money to other activities that are that were not named when you were collecting the funds. Misrepresentation can also result from inaccurate or deceptive statements by the charity or someone on its behalf. as well. So you want to make sure that you are, in a sense, accurate and fair and forthcoming and clear in the information that you're presenting to potential donors. And it can also result from an omission of information that creates a false impression to potential donors. And now, just as a final point here, this issue of misrepresentation can arise if the solicitation or representation was not illegal or fraudulent, but it did provide sufficient harm is caused either to the sector itself or to your charity itself. And it can include deception of current or deception to current or prospective donors, and it can impair the fundraising efforts of other charities. In some cases, we purchase prospective donor lists, and so if you're using that list and making misrepresentations to those donors, it can hurt those donors in terms of their givings as a whole to other charities. Individuals that are donating to charities these days want to educate themselves very much so that they feel that when they do make a donation that the organization is using that money to the best advantage and they're using it efficiently to make sure that the services that the charity is providing are given to the people that are needy. So remember that anytime you're fundraising, your activities really do reflect on your charity as well as the charitable sector as a whole. And that's important to understand that. Now, I think that basically finishes the presentation today. As I said, you would be able to review this again, certainly at your leisure, if you access the charities file and look at any of the resources that are available to you there. And I would suggest that perhaps you take the time to look at that scenario, which I pointed out in the charities file in that section, and see if you have had a good learning experience and see what you've learned from the webinar today. Also, I hope that you would have the opportunity to take the time to fill in the evaluation form, which you can access. And this would help us just make our services and our presentations a little bit better in the future. And I hope that you have had an enjoyable experience here with the Charities File session on prohibited fundraising. We do have some time to take some questions, so questions will be fed through to the host and then to me. So if there are any, you can present them now, and then I can read them out because other people may be interested in your question, and I can help answer them as we go here. I hope wherever you are, you've had a nice day and you continue to have a nice day. We have a little bit of rain here in Thunder Bay, but it's not too bad. We're above freezing, so spring is certainly on the way. If you don't have any questions, then please feel free to end your connection, and that will be fine. But I hope that you will take the chance to go to the SurveyMonkey and give us an evaluation of how you felt it went today and whether your learning experience was an enjoyable one. Thanks again. There was a question here from Tony. When I mentioned that commissions cannot be paid for fundraising, are there any exceptions? Well, I think if it is a commission-based situation, then I think you want to make sure that that commission is low. It is certainly not a high-paid commission. It would certainly be worth your while before you signed any contract which is commission-based, is that you do check with Canada Revenue, and they may have information about this person that may be collecting on your behalf. And so you want to check with them first before you would enter into any agreement. They would frown on commission-based payments based on fundraising, but certainly you could ask them the question, giving them your particular situation, and see if they would think it would be any benefit to you to kind of look at that as an option. At what rate would be acceptable? That I'm afraid I couldn't really offer you advice on. And I would think that your probably best bet would be to check with Canada Revenue if you're going to enter into that kind of an agreement. Here's another question from Robin. When you are a hospital foundation and your basic purpose is to raise funds to give to a qualified donee, in a sense the hospital, how does the CRA look at this? Well, this is very, very common, and because you are a foundation, right, your main purpose is to raise funds. And so you have specific requirements as a foundation, and so there are different rules that apply to foundations rather than to charities themselves. So I think you would have to check with Canada Revenue or check the guidelines for foundation fundraising, and I think that would be your best avenue to consider. I would think that you would still be governed by somewhat the guidelines of the fundraising ratio, but I know that your reporting and your actual guidelines are somewhat different than actual charities themselves, because you are a special kind of charity, being a foundation. Okay, well, I thank you all for attending, those that are still on the line. As I say, I hope you've had a good experience today and that you might have a chance to look at the Charities File website. As I said, and on the website you can see that a CD is available which contains all the information about all of the presentations that have been prepared over the past 3 years, and they would be an excellent resource for your board to consider. The CDs are free, so don't hesitate to order one, and then you can use it at your leisure. If there are any major changes to the Canada Revenue policies, you would certainly be alerted of that information in the future. So thanks to all who have attended, and hopefully we'll hear from you again in the future.